Well, at this point, if any of these conceptual companies has a revenue shortfall, their stocks will be obliterated. There's zero margin for error. Tangibles? Market's very forgiving. Boeing's a serial screw-up. They've had problems, let's see, with the 787, the 777, the 737 MAX, their military contracts, you name it. Yet the stocks rallied more than $10 this week. This morning, some analysts squawked that 2022 will be a year when Boeing gets its act together. I live in hope. But at this point, the stock can rally regardless because it's back in style on the Wall Street fashion show. Yet another reason we own it for the trust. And if it actually gets some orders, wowza! Let me give you another example. Ford Motor. Today, Ford came out and said it can make 150,000 electric F-150s. And believe me, like with Tesla, there's demand for a lot more. For the longest time, you couldn't give this stock away. Nobody cared about CEO Jim Farley's bold predictions for the electric pickup truck. By the way, he made them on our private broadcast in the Charitable Trust Club. Now, though, the market suddenly appreciates an old dog that's doing new tricks. Ford currently sells for 12 times earnings, even after today's 11% jump. I think it deserves a much higher valuation. Oh, I don't want to slight GM. Big interview with Phil LeBeau tomorrow, Mary Bauer, which rallied $4 in its own right, despite fourth quarter sales being down more than 40% and losing the U.S. sales crown to Toyota. Well, that's someday. There are other stocks that are flying with nothing going on, like Wells Fargo. Investing Club name will benefit from higher interest rates, very inexpensive. Wells broke out for a second day. The stock of J.P. Morgan got slashed from buy to hold this morning, soared $6. Honeywell, one of my favorite companies, saw its stock get downgraded today with some comments that made me feel like management's out to lunch. Totally untrue. Yet the darn thing didn't even skip a beat, rallying more than $2. That same analyst suggested GE would be a better buy. Well, they could certainly do a lot worse than GE. Of course, it's not as simple as tech versus non-tech. There are plenty of cheap, tangible tech stocks out there, IBM, Hewlett-Packard Enterprise. Again, though, these are easily valued businesses that have a John Deere-like feel, and that's what you need. Look, interest rates won't go straight up, even as bond yields are ripping today. The Fed may not put through 4 rate hikes this year. But the bottom line, Okta versus Deere is the best way to understand this market. Okta, Deere. No, it's not U.S. versus Holmes, where Theranos defrocked hero looks like she may be headed to jail. However, Okta is guilty of something. It's guilty of being expensive. And maybe that's the only thing that matters in this market.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.